We're moving through late morning on Wall Street, and it's time for another quick reset. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to bring some clarity to the chaos in today's market action. Compared with the last hour, the macro backdrop hasn't changed much, but one big narrative is still casting a long shadow. According to MarketWatch's Jamie Chisholm, a former commodity trader, is warning that we could be setting up for a second wave of inflation that looks uncomfortably similar to the 1970s. That isn't triggering an immediate panic, but it is the kind of piece that gets portfolio managers revisiting their assumptions about how quickly central banks will be cutting and how safe it is to pile into long-duration growth trades without thinking about energy and commodities. On the stock-specific side, one of the clearest upside focal points remains Paramount and the ongoing drama around Warner Bros. Discovery. New reporting from Tommy Kilgore at MarketWatch notes that Larry Ellison is now personally guaranteeing $40 billion of the financing for Paramount's roughly $108 billion bid. That's a staggering level of individual backing, and it reinforces the idea that old-line media assets are still highly coveted in a world where everyone is fighting for content and distribution. Traders are watching that whole media complex, Paramount, Warner Bros., Discovery, and the big streamers, as they try to handicap deal odds, potential counterbids, and what these valuations say about the long-term value of Hollywood versus big tech. Encroachment. On the flip side, Honeywell remains an area to handle with care. A fresh update from MarketWatch reiterates that the company expects a one-time $470 million cash settlement tied to the FlexJet lawsuit and has lowered its profit outlook. That combination, real cash out the door plus a reset in forward expectations, tends to weigh on sentiment in industrials. The question professionals are asking right now is whether this is an isolated legal overhang or a sign that broader margin pressures could creep in across the sector if we do see that second wave inflation scenario play out. Beyond the headline movers, a lot of what's bubbling up this hour speaks to the financial plumbing behind the market. One MarketWatch column from Mark Hulbert points out that hedge funds, despite their elite branding and expanding accessibility, have on average underperformed a simple 60-40 stock-bond portfolio. That's not a trade idea, but it is the kind of under-the-radar story that could influence how institutions and higher net worth investors think about fees, complexity, and whether sophisticated strategies are really earning their keep. There's also a cluster of personal finance stories trending that, taken together, highlight just how wide the wealth spectrum is for the same market we all trade in. You've got one reader with about $6 million in stocks, mostly concentrated in Apple, and multiple seven-figure properties, worrying about tax consequences, as covered by Quentin Futrell. In another piece from the same columnist, a couple with only $100,000 saved is terrified of what happens when a 76-year-old husband stops working. And now, a new column looks at a homeowner whose house has gained $500,000 in value, debating whether to sell it to her daughter at a bargain price to give her a head start. Individually, those aren't moving the S&P, but they do frame the backdrop for consumer behavior. Some households are debating capital gains and estate strategies. Others are focused on basic financial survival. That divergence plays into everything from housing turnover and retail spending to appetite for equity risk. You're also seeing human interest stories, like a reader wrestling with whether to move to Israel for a relationship, or a family legal fight over a home after a cousin's death, stay near the top of the feed. Again, not trading catalysts, but they're reminders that property rights, inheritance law, and geographic mobility all feed into how wealth is built, transferred, and deployed over time. Into the next hour, I'll be watching three main threads: whether the Honeywell news sees any follow-through in industrials, how media and streaming stocks trade as more color emerges on the Paramount, Warner Bros. Situation, and whether this second wave of inflation narrative starts bleeding into rate expectations and commodity names. We'll be back around midday to see how that all evolves, and then with a full wrap at the closing bell. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,